All right, it's the first of the month, and I want to invite you into one of my first of the month routines. This is something I've been doing, for years now, and it is data related and it is Holy Grail related. But first, coffee. So, this is something I started a number of years ago, and I'm not sure what the genesis was, but I've been very interested in tracking the number of MLOs, those are mortgage loan originators, that are working at a bunch of companies in real estate tech, from the big powerhouses like Rocket and Zillow to, at the time, the smaller power buyers and iBuyers, companies like OfferPad, Orchard, Tomo, HomeLight, Flyhomes, Homeward. And, I've been doing this since 2021. And yeah, it's a manual process. So I don't know why, but the first of every month I sit down, I log in to the website that provides it. So every month I log in to NMLS, and this is open to the public. And it provides simply just the number of MLOs at each one of the companies. It provides a lot of other information, but that's what I've zeroed in on. And for me, this was important for two reasons. One is MLO is effectively headcount, and it's one of the best leading indicators that I can find to show how serious a company is about originating mortgages. And that can be a reflection of what they think the market is doing or going to do. That can be a reflection of their level of investment in the space. Just whatever it is, it's the amount of headcount, people that they're hiring to process loans. And as I said, I think it's a great leading indicator because you hire people based on not only where you're at now, but where you think you're going to be at in the future. So to me, it's a fantastic reflection of a company's level of seriousness and investment in the space. Not just the total number, but how that number is changing over time, right? The slope of that curve and the growth. That's probably the most particularly interesting to me. Looking at the relative sizes, yes, also interesting, but I like to see the slope of that line. I'm logging in right now, and the first one pulling up is Zillow Home Loans, and that's 568. So this is April 1st, 568. And wow, because I'm just typing this into Excel. If I look at last month, it was 532, and the month before that was 520, and before that was 490, 464, right? You get a sense, like that's 568 people, real human beings working at Zillow Home Loans, working to originate mortgages. Zillow has been investing in this so heavily for so long. If I scroll to the left here, just pick a date at random, November 2022, they were at 146. So they had 146 people originating loans. And now today we're up to 568. Is it the biggest? No, it's not. So we'll do Rocket next. All right, so pulling up Rocket Mortgage, 3675. So just pop that into my Excel file. Could I get AI to do this? Probably. But it's, I don't know, like making coffee. It's a interesting and soothing morning routine to go through. So 3675, 3,675 mortgage loan originators at Rocket compared to 568 at Zillow. So yeah, Rocket is exponentially bigger than Zillow. But what's interesting, if you look at this over time, is those numbers are converging, and they're converging quite rapidly. Again, if I kind of scroll to the left here and just pick, let's find November 2022 again. Zillow was at 146. Rocket was at 9,495. I mean, that was a very different world back in 2022. But still, we've gone from quite a big difference there to a smaller one here. And Rocket has slimmed its size quite a bit, with the interest rates going up, the mortgage business, it's boom to bust. Whereas over the past couple of years, Zillow's really been the only company that's significantly and continually increased their MLO count over time. So I'll pull up just a couple more of my favorites that I check on a regular basis. Prosperity. So Prosperity Home Mortgage is the wholly owned subsidiary of Home Services. So this is they have a big brokerage, Home Services of America, and they also own Prosperity Home Mortgage, which is the lending operation. And as I've talked about before, they're kind of the best. I mean, they're the best example I've seen of a brokerage attaching mortgage over the past decade. And, with mortgage attach rates about 20%, they're kind of the status quo, best of breed in the industry, not a new tech company coming in and trying to, disrupt everything, but, kind of somebody who's been at this for quite a while. So Prosperity Home Mortgage, MLO count 493. All right. So 493, last month was 495, before that was 498. This is effectively staying the same. So that's interesting, right? Zillow's going up, increased quite a bit month over month. Rocket has trimmed down a little bit. And I think I read about that, with the acquisition of Mr. Cooper. They're continually looking to rationalize and right size that business. So Rocket down a little bit and Prosperity about the same. And then last but not least, let's take a look at my friends over at Tomo. I'll probably get into Tomo more in the future, but pure play mortgage origination business. As we heard from Carrie Armstrong earlier, she was a co-founder and worked at Tomo for quite a bit. So this is her business. The business is still in business, run by my buddy Greg Schwartz, ex Zillow. But this is a pure play purchase mortgage origination lender. And the reason I'm talking about them right now is out of all the companies, they're clearly on the smaller side, but they have also been continually growing their MLO count over the past year. In stark contrast to a lot of the other smaller companies, they're pretty much steady. But Tomo's been investing, and that's a clear signal to me. Something is working over there, right? If they need more money to originate more loans, something's working. So the MLO's 37. And month before that was 34, before that 32, 28, 26, 26. So yeah, in the past year, if we look at that, up to 37 from 16. So just about doubled. That's significant, right? On a percentage basis, that is significant growth in MLO headcount. So like I said, all these companies are investing, they're growing, they're hiring people, and they're seeing some level of product market fit or traction in this space. So to me, this is another clue that helps me kind of pay attention to who's moving in the space, who's moving fast, who's declining. And a lot of this reflects back on that search for the Holy Grail. As I start thinking about the Holy Grail, one thing that comes to mind are this class of company called power buyers. So, power buyers really came on the scene in 2021, 2022. There were some before and some after, but that was the heyday of power buyers. And effectively, what this type of company did was they enabled home buyers to have kind of enhanced superpower type offers, right? They would turn every home buyer into a cash buyer. And they really led with this idea of buy before you sell. So you can buy a new home before you sell your old one. So you move into it and then the old one is sold. And there were a number of companies in this space, Homeward, Flyhomes, Knock, a bunch of others. And what really stands out to me when I looked at them at the time and thinking about it now is their mortgage attach rates, right? So part of the Holy Grail, probably the biggest part, is this idea of attaching brokerage and mortgage together. And that's what a lot of these power buyers were doing. And they had mortgage attach rates of about 80%. Yes, you heard that right, 80%. Right? That number really, really stands out to the, conventional industry average of anywhere between 15 and 20%. So what was the secret behind that? Part of it was just simply the product fit. A lot of consumers would be attracted to those companies because of the proposition, cash offer or buy before you sell. And the first step is getting pre-approved for that effectively as a loan, a bridge loan. And you know what? Getting approved for a loan is a very similar process to getting approved for a mortgage. So once they were down that path, it was very easy to keep those consumers, those home buyers in the ecosystem. So it makes sense to me to start by looking at some of the power buyers. And, you know, because they've been in it, right? It's not a big billion-dollar company trying to find the Holy Grail. It's a startup, right? Scrappy, in the trenches, seeing what works, see what doesn't work. And I think there's a lot of clues and lessons learned and knowledge there. So I was able to sit down with Ryan Dibble, one of the co-founders of Flyhomes, and talk to him about his experience. So if we're thinking about the world of the Holy Grail, when did you first become interested in it and starting exploring the idea of a one-stop shop?
We started to explore that trying to solve our customers' problems in very hot real estate markets. And so the easy example I have is at the time we could pick Seattle. A home comes on the market, and 5 days later, you have to make a non-contingent offer, no inspection, no financing, no appraisal, none of those things. And we started as a real estate brokerage, working directly with buyers, and it just became a like, how do you drive a customer to get to that point safely where their financing is secured. We're confident in how the home is going to appraise. There's no defects associated with the from an inspection, and getting sort of like reliable results from partners was just always a challenge.
Did you start out the journey trying to combine brokerage,
No,
mortgage, title?
no.
So when did you kind of realize that?
Yeah, so we started to work on that when we got to the point of providing our turning them into cash buyers.
Mm.
And part of turning them into cash buyers and us taking that risk on was we needed to be really certain that they were going to be qualified for their financing. And so we took that underwriting on in-house, and that was sort of our first step of like, okay, well, we can underwrite them, we can get them the pre-approval and get them moving quickly, and then attach a long-term mortgage on the transaction. So we did not start with any sort of like, hey, we're going to go build the Holy Grail. I would say, stumbled into it.
And did it work?
Yeah, it did. We were able to expedite customer timelines, uh, provide seamless is probably a bit aggrandized, but a digital experience that was consistent throughout the mortgage, real estate, and title and escrow. And then we're able to attach our services at a very high level. Um, it we always struggled with sort of jumbo mortgages because
Mm.
it's hard to compete with like large banks in San Francisco, Seattle, et cetera. But our mortgage attach was 85%.
Did you do title as well?
We
What
did.
was title attached?
Uh, so title attach was we mostly had title in markets where seller dictated,
Mm.
and we were
Uh,
a buyer's title. So I think we got like 20% or 20, but it was a heroic 20% against sort of like market norms.
but mortgage attached, 80%. That's pretty good. What was there like one aha moment where you and the team kind of woke up and you're like, holy cow, look at what we're doing here? Or did you just kind of stumble into it?
Um, so the answer on like why did we get attached? It was a sort of a continuity of the service that we were focused on with our real estate brokerage. I don't know that the like, oh, it's seamless digital. I don't know that that had any like real impact on it. I think customers
Mm.
essentially just expected it,
Hmm.
right? Like I'm working with Flyhomes. Like I don't, I'm not thinking about like, oh, this is different, and it had to be different, right? It had to be separate legal entities. We had disclosures and sharing and all of those components. Um, but what we realized is that our differentiation were our financial products. combined with the service. And we took the financial products, and as we transitioned them to be mortgage products, it became a, hey, get qualified with our mortgage business, and get pre-approved to use the financial products. There's no requirement, there's no any of those things, but just making that easy for the customer, and then putting that like really valuable financial product further down the funnel, uh, enabled us to provide better service and convert.
So when you say put the financial product further down the funnel, what do you mean? And can you give an example of that?
Yeah, so our primary value prop that we position, we sort of had three, like great service, vertically integrated digital experience, and then our financial products of be a cash buyer, or buy your next home before you sell your current one. And those financial products of the buy before you sell and the cash product, like absolutely resonated with our consumers, where they're going, and on average they're making they need to make 9 offers to win their home. When they worked with us, I think it was like 1.8 or 1.9 offers to win their home, because they
Hmm.
were able to leverage like process experience plus our financial products to go win.
But you didn't lead with that?
We led in our go to market with that messaging,
Mm.
but the product itself sat in our mortgage business. So our sort of like, we led with the real estate business. I continue to think that is sort of like the tip of the spear, in terms of like that's where the customer trust lives. And so we acquired to there. The real estate team was trained. Like, you may use the financial products, you may not use the financial products. If you're the only offer, we may not need to use them. But let's get you prepared. And that the preparation was, that product was then delivered through the mortgage business. And so I call it sort of like, instead of keeping the shiny object at the top, available at the top of the funnel, it was further down the funnel. And so then that made the introduction easier. The customer started working with the mortgage business, was like, hey, this is great experience as well. And that led to the conversion.
So that worked for a while. Did it stop working?
I would say that the vertical integration did not stop working. That continued to work. What we struggled with is that we sort of had the wrong business model, with the brokerage. We leveraged like a W-2 type model, where we essentially had fixed costs. And then we did acquisition, the company did acquisition. And in 2022, when interest rates shot up and the market uh, fell to some of the lowest transaction numbers, our go-to-market stopped working effective, both in duration and in cost, where a home buyer would come in to work with us, and historically they would convert to revenue in 90 days. And they started to, that 90 days rates had gone from 3 to 3.75, and they're no
Hmm.
longer qualified,
Hmm.
sitting on the sidelines. And so the conversion timeline started to take too long. And then, as all things, time kills all deals. And so our go to market, under that business model to feed that high fixed cost engine, stopped working.
And specifically on that, it was the customer acquisition cost that really got to that was expensive,
Yeah,
right?
that's right.
It's expensive to acquire customers.
That's right.
But then once they're in the funnel, that Holy Grail ecosystem was working fine.
Yeah, yes. Once they got under contract to buy a home,
Mm.
that continued to work fine.
Was there like one bit of customer pushback or feedback you got from customers in terms of getting all the services under one brand?
Our brand to consumers was high value, high trust, and so at every part of the process, it was you're free to use whoever you want. Like
Mm,
we actually encourage people to go get other quotes from mortgage loans and use other services intentionally. And so that reiterated the trust. And what it meant is that we had to be very competitive on cost for mortgage, right? So, we weren't making 600 basis points of gain on sale on the back end on our loans. Like we were running a very tight margin mortgage company.
do you think consumers want to get all these services from one company?
I don't know that they specifically they want an
Mm,
easier experience. And
mhm.
if you think about the customer going through a first-time home buyer or even a second time, but they haven't bought a home in 3 years, there's a lot of unfamiliarity with the process. And so when they're trying to figure out, does this home work for me? What improvements am I going to make? Uh, can I imagine my family living in? They're going through all of these emotional decisions, and you start adding layers of complexity. Plus, oh, you need to make 5 different decisions at each one of these layers. I do think generally people would prefer to just have something that works, that's cost effective and simple for them. But I don't know that people were I wouldn't say they were outright demand. I'm only going to work with Flyhomes because
Mhm.
I'm gonna I only want to work with your suite of vertically integrated companies. I don't think that is a like a true articulated customer need.
So people want easy. That's the number
Yeah,
one thing.
yeah.
Yeah. Do you think the Holy Grail is a myth? Like a lot of people, a lot of companies have been trying to do this for years and spent a lot of money.
I think it is. I don't think it's a myth, but I think you have to provide like real differentiation. Uh,
Differentiation versus what? The status quo?
yeah, I don't think it's enough to just be oh, we introduce them
Mm,
further up the funnel and we make the technology more seamless. I think there needs to be like real value add for the consumer. And for me, that was like the buy before you sell products and sort of a true differentiation. I'm not saying it's a myth, but I do think there needs to be like a very clear, this is why it's less expensive for you. This is why it's easier for you. And those things need to be actually true.
well, the differentiation I get if it's buy before you sell, because
Yeah.
that's different than sell before you buy or
Yep.
try to do both at the same time.
Right.
All right, got that.
Yep.
Um, but what else? Like some companies out there are talking about bundling and saving, right? If you use multiple of our services, it will rebate you or save you money. Do you think that's enough to move the needle?
Uh, I I think if it's true,
Mm.
and so I think if they are sold that and then they take their mortgage quote and they go to their local bank or their local credit union and they see a better option, the whole trust stops working. And I think that part is the hard part. Um,
Trust.
well, like for it to be true.
Yeah. Yeah.
And in particular, I think about the mortgage because a lot of these financial assets, it's money. It's the most ubiquitous commodity in the United States, and so we would see crazy things where so and so money center bank wants to buy market share, and they would provide customers with outrageous pricing. Well, now your value prop you told them that it's cheaper if they use all of your services in house is not true, and they're able to validate that relatively easily.
Mm,
And so that's where I think that the bundle thing starts to. It may be true in the aggregate. It may be true on average. It may be true this month. But is it universally true? And how do you actually deliver on that? I think is a hard part because all of real estate like trust is.
you keep coming back to trust. It sounds like that is foundational in making this work.
Yeah. Yeah. Yeah, and so I do like wonder. I think consumers do trust big brands at some level, right? They
Mhm.
trust a name like Zillow, and they trust a name like Rocket because they're familiar and they see it. And so I think there at least at some level is like a strong foundation and starting point. But how do you deliver on a promise of it's cheaper is hard across the stack, because like it's not cheaper if you sell by owner, for example, right?
Yeah.
And so I think that that's the hard part. If the differentiation is just cost, it's hard to actually deliver that.
And I wonder if the differentiation is just cost, if that's actually enough to move the needle. If a consumer will make it like, if they're in a workflow already, they're
Yeah,
probably just gonna keep going, right? That's
yeah,
like the law of physics, an object in motion is
that's
gonna
right.
stay in
That's
motion.
right. Yeah,
So if they're already in an ecosystem, they're just gonna stay there unless there's a reason to exit that ecosystem. So if they're already there, why do I need to be throwing money at them or a rebate or a discount? Let's just make it as easy as possible.
yeah, but that's why it hasn't worked, right?
Well, why?
Well, because I think there's this belief that it's just like process simplicity or technology is going to lead to, and I don't think that is true, because I think people talk to each other and they ask their parents, they ask their friends, like, oh, make sure you check other
Mhm.
options, check other
Mhm.
quotes, get other, and so they are going to check these other things. And so the at that point, the trust will erode if the value prop you are selling is not true.
I'm kind of confused. I'm like, "Well, geez, what is the value prop?" If you're a company like the biggest companies in the space, let's say there's 3, Zillow, Rocket, and then a big brokerage like Home Services of America,
Okay.
right? Um, what what is the value prop they can offer?
Yeah, I mean, I have not worked with any of those companies and know their flows and how things work, but I imagine that they can deliver on a number of those components and um, uh, make things easier. I do think if they are able to consistently deliver on experience for the consumer, that will build trust with the other parties, like a real estate agent or someone who is working with them in that transaction, and that does go a long way in sort of reinforcing with the consumer what is the right option for them. I don't know exactly the balance sheets of each of those companies, but I think they have a lot of resources to figure out
Mhm.
true differentiated experiences to help make a case for why staying in that ecosystem.
I think it's tricky, I mean, without naming a specific company, they could say that it could be differentiated based on the product, so buy before you sell.
Hmm.
I don't think any of those companies are really doing that. Rocket is they teased something like that a little while ago, but I haven't heard much about it.
Hmm.
But it's not that. Effectively, a loan in one of their ecosystems is just kind of a regular loan or a mortgage you'd get anywhere else.
Yeah.
So it's not a differentiated product.
Yeah.
Pricing is kind of TBD. I don't think anybody has come out there to say, "Oh, if you stay within the ecosystem, it's gonna be cheaper."
Yeah.
In Rocket's acquisition case for Redfin, they mentioned it,
Yeah.
but I haven't quite seen that yet in any sort of consumer-focused marketing. So I
Yeah.
just like, what's left?
Yeah. I do wonder if there's like something to look to the home builders, the big national home builders,
Mm,
and how they are able to drive very high attach, oftentimes through a perk, a
yeah,
reason to use
yeah.
their mortgage company. And I,
Boy, that sounds illegal.
it it does raise questions around how that can work. But I do think like I think some of the announcements around what Open Door is doing now, where they're trying it. It seems as an outsider that they're trying to build a similar type of structure where a home builder is able to provide incentives for the financing, and Open Door, as a non-real estate brokerage, is able to do similar things with their inventory.
What
Um,
incentive, like what? We'll upgrade your countertops to
no,
grade it?
I mean, I think these rate buy
Oh,
downs
just
and
a rate to buy down.
yeah,
Yeah, yeah.
some of the things that they're
Well, that was announced in the, as part of the Compass and Redfin deal, uh,
I didn't see that.
where, yeah, Rocket, if a customer uses a Compass agent, and they choose to get a Rocket mortgage, they get kind of a rate buy down or, $5,000, $6,000 credit.
Yeah,
So there's something real there.
yeah, but that's Compass with Rocket?
You can imagine
Did
the
they
same thing is probably similar with Rocket and Redfin.
Yeah,
Like, "Oh, stay within the family, stay within the ecosystem,
yeah,
and we'll give you this thing."
because
It's like,
you can bundle RESPA. I'm not a RESPA lawyer, but you can provide bundled discounts to consumers on
yeah,
RESPA.
yeah. But the question I have is it meaningful? Like really, is it truly meaningful for a consumer? They found a house, they love the house. They're really gonna do whatever it takes to get that house.
Yeah,
And they're in this ecosystem, and somebody's saying like, "Oh, if you stay within the ecosystem, we'll give you a point off your mortgage for the next year or
yeah,
$5,000 back." I mean,
yeah,
I don't know if they're getting a check for 5 grand. I doubt it. It's probably getting rolled into a 30-year mortgage. So that's like what, 10, $15 a month?
right.
Like, are those companies just leaving money on the table? Like, is that an actual meaningful thing that's gonna change consumers? I don't know.
I don't know either. We never really did any sort of bundling in terms of we ran each one sort of independently, but I also we didn't have a ton of margin on the mortgage
Mm,
business to be giving away anyway. So it was more of a value add and service. But yeah, I don't know the answer, and I don't know. We talked earlier about sort of like small compounding
mm,
improvements
yeah,
leading to bigger things. And so there is some bit of like the answer might be all of these things
yeah,
add up to, hey, it's easy. I'm already in the process. Everything's digital. I only have to upload information one time and it flows through the entire process. It's less expensive.
yeah.
Um,
It's like, why not? Why wouldn't you
yeah,
stay in this ecosystem?
yeah,
If it is an undifferentiated product,
yeah.
which it kind of is,
It,
like, why not? I'll
definitely.
just stay
Yeah,
here because of that. It's easy, I'll save some money.
yeah,
The people are nice, they're all talking in the same system.
yeah.
Because at the end of the day, I think what everybody cares about, consumers and agents, is a frictionless transaction. They want
Yes,
the deal to go through,
that's right.
right?
Yeah.
And if you got everybody kind of speaking the same language, working in the same building, or maybe 2 separate buildings with 2 separate entrances,
That's right.
then it'll happen.
3 different business, yeah. And then you add in home insurance and you got another yeah.
Yeah. There's a lot of companies trying to do this in this space. You don't have to name a specific company, but what type of company do you think is best positioned to succeed?
I tend to think that the real estate component is where the highest trust lives, and that is the most valuable part of it.
Yeah, I'm with you on that. And when you say the real estate component, you talk about an agent?
It's with the agent. There then tends to be the agent may or may not have the highest amount of trust in their brokerage and their firm and are think of themselves a little bit more as they are an entrepreneur. They live and die on their own reputation and their own trust. And so I would say that a real estate brokerage is the best positioned to build a vertically integrated experience for the consumer. Um, because although the trust lives with the agent, I'm not sure that that gets fully aligned to the company, the
Mm.
brokerage firm
So
itself.
you're saying you're not sure if a brokerage.
Yeah, I'm not sure that I I think I'm starting to come to the like I don't know that this is that anyone is well positioned
Mm.
to do it because that critical layer is with the real estate agent. And I think it's hard for the mortgage company to go up funnel. I think it's hard for a brokerage to like aggregate and go down funnel. I think it's particularly challenging for any of them to align the incentives in the right direction and find a true differentiation. And so I potentially would say like probably best positioned would be someone who's able to at some level control the customer and the real estate agent and I don't know that I
Mm.
have a strong opinion of who that is.
What I'm hearing is, the company that succeeds in finding the Holy Grail, they got to have boots on the ground. It can't just be a website, right? There's got to be a really strong connection to the agent
Yeah.
in someone's living room.
Yep.
And then combine that with a differentiated experience or product for the
Yep.
consumer that
Yep.
actually moves the needle.
That's right.
And what I mean by moves the needle is, you can offer them 5 grand, but if that doesn't move the needle, it
Right.
doesn't count. It's
Yeah.
just different. It's not better. It's just different.
Right. And if that 5 grand is just moved from one pocket to the other and
Right.
presented as a discount versus a true discount.
Do you think it's worth it for all these companies to be looking at this and investing in it?
I mean, you call it the Holy Grail for a reason, right? So
Mm.
it's so incredibly, the upside is so incredibly valuable, um, that, yeah, I think you should, it's worth trying.
Yeah.
I think most of the companies that are doing it are also like, they have money to go invest in trying to figure it out. And if they can, it's the Holy Grail. And
If you think about the counterfactual, what else are they going to do? A lot of companies in this space, they're kind of hitting this brick wall, right? If you're a brokerage, you've got shrinking margins.
yep,
And what else can you do? I got to recruit agents, I got to retain my agents, and I'm making less company dollar. How else am I going to make money, right?
right, right,
If you're, a big mortgage company, like, all right, cool, we're a mortgage company. We go out and sell mortgages. Like, what else do we do?
right,
Um, and if you're a portal, a home search site, those are mature. Those companies have been around for 20 years. You
yeah,
can only make so much money off so many leads,
right,
and it kind of feels like it's plateaued.
yeah,
So, at least in the US, where a lot of these efforts are, I think the biggest efforts are here in the US to look for the Holy Grail.
hmm
Um, it's like, well, what else are they gonna do?
yeah. I think that's true. And yeah, if somebody can break through on it, it's very valuable.
Yeah, it's meaningful. My hope is, and I'm sure you share this hope, is at the end, it's actually good for consumers.
100%. Yeah,
And it's not just companies figuring out a way to make more money.
that's right.
How is this great for consumers? Is it a point off their mortgage or $5,000? Like, yeah, that helps affordability. I
Yeah,
mean, a little bit.
yeah,
But what are the solutions or the outcomes that are really good for the
yeah,
people that, want to buy a home?
yeah, yeah. And I think that's the promise or the hope is that it will be better for consumers and
Yeah.
not just aggregating dollars and companies.
After Ryan and I stopped recording, we kept talking. And our conversation really went into this idea of what the power or the value of convenience is. And for that, I think about other things in life like TSA pre-check or where people will pay extra money to get a convenience, right? You still have to do basically the same thing, but you get effectively a shorter line. And Ryan was sharing with me some examples he knew about of other financial products where, maybe somebody wouldn't get the same or the best rate possible, but the process was exponentially faster or easier. So somebody, effectively a consumer, would again be willing to pay for convenience. And I think we see that time and time again in the industry and also outside of the industry. This idea of, there is some value in convenience. And I think perhaps the most famous example of that in the real estate industry is Open Door and the iBuyers, right? I mean, that's the idea behind that is that somebody would pay for convenience. You're willing to leave a few points on the table in terms of your home value, right? Just for the speed and the certainty of that transaction. So again, just to be really clear, let me pull that one out. say your home is worth $500,000. Well, the idea is that if you sold to an iBuyer, somebody might accept 490,000. And again, this idea, like a home is worth X, is a giant misnomer anyway, right? A home is worth whatever somebody's willing to pay for it, and that depends on a lot of different things. As a good friend of mine likes to tell me all the time, the value of a home changes depending on the weekend. Right? It's just totally, totally out there. So again, this is an example, but say your home was worth 500K, somebody might be willing to leave some money on the table and sell it to an iBuyer for 490, 480. And the idea behind that is somebody's willing to pay for convenience because that transaction is so much faster and easier than bringing it to market, right? You don't have to do open homes. You don't have to get rid of the cat smell. You don't have to keep it clean. You don't have to get your kids and your pets out of the house whenever, somebody's coming to tour it. You don't have to fix that, paint that, right? You're trading convenience for money. And we also see it in the car market, right? You think about used car. If you have a vehicle and you want to sell it, you can either sell it your own or you can bring it to a dealer. And guess what? If you bring it to a dealer, it's probably going to be worth less, right? You'll get less money for it. Why? Because you're paying for convenience. So anyway, a lot of this conversation Ryan and I had after the fact was exactly around that. This idea that, maybe the one-stop shop, maybe part of the Holy Grail is this idea of convenience. And that in it of itself, convenience equals value. And being able to tie that all into one spot, maybe that's enough to kind of move the needle to get people into an ecosystem. Which actually brings up the second really key point or takeaway for me when I think about this. The idea that an object in motion stays in motion, right? Kind of using that law of physics, but applying it here. An object in motion stays in motion unless acted upon by an outside force. So if a consumer, a home buyer in this case, is in an ecosystem of some sort, and that could be a loose one, it could be a tight one, it could be closed, it could be open. But the point is they're probably going to stay in that ecosystem unless there's a reason not to. So what do I mean by that? Well, I don't know. If you find a house you want to buy, and you're working with an agent, and the agent recommends a mortgage person and their own title thing, you're probably just going to stick with that, right? Or I might go so far as to say a consumer will stick with that unless there's a reason not to, right? There's no motivation to break outside of that ecosystem. And I think, this is something that's been on my mind, and I'll cover this more in the future. Carrie mentioned it, right? Consumers don't price shop for mortgage. So there's a reason, right? They're in the ecosystem, they're just going to stay there. They're by default, consumers are not shopping around for the best mortgage rate. They're not calling 3 or 4. I think on average it's 1. So, there's no reason to pick up the phone and get other rates. If you're in the ecosystem, you're in the ecosystem. So if in the world of the Holy Grail, a company like Flyhomes or an iBuyer like Opendoor or Zillow or Rocket or Berkshire Hathaway, right? They've kind of quote unquote captured these leads and they're in the ecosystem. Chances are the consumers will stay in that ecosystem unless there's a reason to leave. And maybe we call that consumer laziness. Maybe it's another physics law, the conservation of energy, or just kind of, you're in this place, you're going to stay there unless there's a reason to leave. And I think that's a really important psychological consideration to be aware of when we're thinking about all of this. And then the last question, did Flyhomes actually find the Grail? Did they find the Holy Grail? And it sounds like yes. They kind of stumbled upon it, right? They weren't out there looking for it, but they did find it. And kind of like Carrie's story with Tomo, they found it, but then they pivoted away from it for a variety of reasons. I mean, this has to do with the housing market and brokerage and, W-2 agents versus 1099s. Like there's a lot of factors at play to make a business work in this space. But that was striking for me is that, Ryan kind of said they stumbled on the Holy Grail and they were really, really pleasantly surprised by some of their adoption numbers and being able to solve problems for consumers. But maybe as the inverse of this whole theory, that wasn't enough, right? Yes, you can You can identify what the Holy Grail is. You can try to find it. You can get that working. But also, these are all businesses and they need to make money in a sustainable way relative to the market, whether it's the real estate market, the fundraising market, the stock market, whatever it is, cost of capital. And all of those ingredients need to equal up. So, you know, A, there's finding the Holy Grail, and B, there's making, the Holy Grail business work at the end of the day. And those are two very different things. So, the last thing I want to say on this is I just launched a companion website for this new Search for the Holy Grail podcast. That's at holygrail.mikedp.com. And yeah, it's a cool companion site where I've kind of plugged in a lot of the transcripts and I'm pulling out the evidence, the theories, and all of that in one spot. So you can kind of follow along as I go, look at, my thoughts in real time in a fun, interesting visual way, if you want that as a companion to listening to the podcast. So that's holygrail.mikedp.com.